traders from across the globe, and welcome to the 1758th edition of Short-Term Trading Live with Oscar Carboni. All right, traders, so this 1758th installment of these educational videos coming at you on a Sunday night. This is for trading Sunday through Monday, April 9th, 2018. Traders, we've got some topics on the board. They are interesting, but before we go there, you must know that futures trading, stock trading, ETF trading, trading anything these days is extremely risky, can cause substantial financial loss, more than you might imagine, is not suitable for all traders. You must recognize the insane volatility going on out here. The stops are enormous. There are no stops big enough anymore. You got to be able to afford that if you're going to play this game. Put your stops in first. Always put them in. Don't trade without them. And come on down to livewithoscar.com and join me in my live trading room. So, what is on the board? NASDAQ, emini S&P, and Apple. Red OMNI for trading Sunday through Monday. Of course, we'll go over some charts to explain why. But there's more, traders. The flavor of the week remains the same, and that is the test of the 200-bar moving average, the Blue Light Fund Manager Special. That is still what's been going on for an entire week. I've been bringing you a series of videos all last week. It's been around the same thing. We just keep hovering in between this bear flag scenario and the 200-bar moving average. That hasn't changed, but what has is now short-term bear flags are all over the U.S. indices charts. Bear flags all over the indices charts for short-term trading. And Apple looks ugly. And if Apple looks ugly, I mean Apple, right? Apple DAC, Apple, NASDAQ, it's all one thing, isn't it? If Apple looks ugly, likely so does NASDAQ. So we are going to look to sell major fat rallies. We're going to sell a fat rally. Emini, S&P, NASDAQ, Apple, if we can get one. Traders, you know, so let me back this up. You haven't heard a lot about what's going on politically from me. I mostly just care about the charts. But the things I have mentioned in the past were, we need to do something about Dodd-Frank. Please, somebody give us a liquidity mechanism. So Trump has been taking care of that. The president has been taking care of that. Slowly, we're starting to get more liquidity in the markets. The Dodd-Frank rules are being pushed away a little bit. Banks are starting to put their trading desks back together. You don't hear a lot from me about that. You also heard lots from me about trade over time, especially with China. And now Trump's starting to take care of that, so you don't really hear a lot from me about that either. Again, my job's to get these markets right, to tell you where to buy and sell these markets, to hopefully have our stop in the right place and it doesn't get hit, and to get out with some profit and do it again every single day. Head down, nose to the grindstone, on to the next trade, right? That is my job. At the same time, my job is to know what's going on politically, what's going on economically, and how the fundamentals should come out in the charts. And one thing I will say, I'm not really going to get into what's going on because, again, the things I've been asking for are getting done, so I'm just trading and that's that. But I will say this. I believe a lot of you are confused about our stance or the president's stance or the U.S. position when it comes to trade with other countries around the world. I'm going to try to make this very simple, but just try to understand the way things really are. This couldn't be a trade war because if it was, we already lost that. Here's why. Just think about the figures. If we go to sell a product in Europe, any product, we make it in the United States, we go to sell it in Europe, they charge us a 25% tax just to move it into Europe on many of our products. On the exact same product in Europe, when they go to sell it here, we charge them 8, 10, 12% maximum. So we've already lost that trade war. Now Trump is saying to other nations, right now, you charge us this much and we only charge you that much. So I'm asking for one of three things. Either you charge this much and from now on we charge you that much, or we charge this much and you lower your price and we charge the same, or we come to the table and come up with something in the middle. Is that really unreasonable for a president of the United States to ask of other countries that have totally lopsided deals with our country. Now, understand, it wasn't really a bad idea. The 50s, 60s, 70s, even leading into the 80s, what the United States did, and it was a really good idea. You went out and you made friends with every single country that Russia wasn't friends with yet. You gave them a deal, even if it was lopsided, so that the U.S. could put their arms around them and go, they're our friends, not yours, Russia. We made friends with them. They're our friends. They're our trading partners, not you, Russia. That's the way it used to be because of the Cold War. What else happened? That also helped us get fantastic pricing on products. The consumerism in this country, the economy's based on it, and having products made abroad really made sense for many years. The price came down. Our tough unions in this country made it impossible for our companies to really do business. It was cheaper to get it from China. And another scenario, I just want you to understand how this works. Let me just show you or paint another scenario for you. Imagine, because this is Vegas, I'll use cards instead of trading. Imagine we're sitting at a card table. Big card table. The United States is over here, Europe on the other side, and then there's chairs for a lot of other countries. What has happened over the years, and it was okay to do this as well, is Europe and the United States said, you know what? China wants to sit down at this table. Uruguay wants to sit down at this table. Africa wants to sit down at this table. The problem is they can't really afford to play this game like we can. We can afford the Backrat series here. They can't. Why don't we let them come to our card table anyway, and here's what we'll do. We'll let them cheat. We'll put on blinders. We've got so much money in our stack in front of us anyway that these little countries wouldn't hurt us even with a bad deal. We give them a bad deal. In other words, they have a much better deal to send their products to the United States. We've got a worse deal to send our products to them. But even with that, having them make our products and ship them back to the U.S. was still cheaper, and this was beneficial. So, twofold. You got products much cheaper, and you were able to make friends with other countries before Russia, the communists, did. Well, that's old-fashioned, traders. These countries that we let come to that card table have now become equal with us. Our huge pile of coins or chips has been spread out amongst those other countries. It is time to tell them no more cheating is allowed. You're sitting at the Backrat table. Everybody here's got the same amount of chips. We're all going to use the same rules. That's what's starting to happen now. So Trump saying, listen, if you're going to charge us 25 and we're going to charge you 10, it doesn't work. Either we charge you the same, you charge us the same, or we will meet in the middle at the negotiation table. That is right. That is what the U.S. needs right now. So if we are going to break a few eggs along the way to make an omelet, so a few eggs will be broken. I think the president is making an omelet. I like the moves he's making. I do not think he's trying to create a trade war by any means at all whatsoever. From what I am seeing, he's basically saying, come to the table and negotiate with us, otherwise we're going to charge you exactly what you charge us. How could that be unfair of the United States? If you think that's unfair, you hate the man, not the plan. And I'll tell you right now, you don't have to like the man to follow his plan. His plan seems to be doing all right as far as I can see economically. I don't give a shit about his personality. He's never going to be at my dinner table. My daughter is never going to marry him. He's not going to be in my family. We'll probably never even meet and shake hands. Why do I need to like his personality? You don't either. So if you think this trade war is the reason why the market's going down, and oh my God, how could Trump be so mean to China and Russia and other countries? They have been being mean to us for years while we've allowed it. All we're trying to do now is stop the allowance. Nothing wrong with that. With no further ado, let's go look at some charts. Traders, the Dow Jones Transportation Average weekly bar chart deemed the leader of U.S. indices. Look at how well we have held since this channel began. And then the average gets involved, and just look at the insanity, the way it holds the trend line, holds the average. This test is taking place right now. This is the only chart that's positive in this entire chart segment. That is it. This is it. Past this, I don't have a single bullish chart to show you, but let me show you what I have. That could absolutely turn this around and turn us right back into a bull market as it has done almost every time it's come down here. But until it does, we'll have to play the short-term omnis, right? So let me show you what that looks like up close and personal. Same chart, daily now. We had a bear flag. We broke down out of the bear flag, hit the 200 bar moving average, rallied back up, and came back down out of the bear flag and settled beneath it. The test of the 200 happening immediately on Monday. So we are in the throes, or the flavor of the week, if you will, is testing the 200 bar moving average. Same chart once again blown up. Now I'm going to show you another average that I use. The 200 has been removed, which you would find right under here if we were looking for it. And what I wanted to show you is this particular average doesn't usually get ran through very often. If it does, it's very quick recovery. But look here. You have just stayed under this thing, and you are here now. And this is a bear flag, undoubtedly. You are below that orange average, which you almost never get below, and you are broken down out of a bear flag. That is more bearish than the other chart I just showed you for sure. That short-term trading, that's for up close and personal on Monday. Then there's your NASDAQ traders. In this very same chart I showed you in my latest video on Thursday evening, that we had gotten out of the channel, turned around and got right back into it, and what a smash down took place since then. So as you can see, this channel held once again, just like it always does, and generally you work your way back down to the bottom of that channel eventually. So not looking good, especially if we break that 200 bar moving average. We have not yet, but it looks like it's going to try this week. E-mini S&P daily bar, bear flag. We got under the bear flag, came racing back up, so we got under it, came racing back up, went to the top of it, turned around with a miserable failure, back under the flag and at the 200 bar as I give you this video. At the 200 bar moving average right now. We do need to hold it. It doesn't look like it will short term. Hopefully it will long term. That's where we stand right now. Then you've got Apple. Traders, if Apple isn't going to go up, I don't think anything else goes up tomorrow. Apple looks weak. Why? Because usually if it gets above the Omni like it did here, it builds a nice bull flag and takes off. Well, this time it got above the Omni for one session, turned around and dumped miserably. Look at what it did last time it got below the Omni. So, I say we've got a red Omni to begin with. You're below the Omni average. We've got indices looking lower. We are expecting Apple to be a downward market for trading on Monday. Come to livewithoscar.com and I'll be more than happy to share my Apple levels with you in the live trading room. So traders, you've seen the charts. You've got my technical reasoning why we've got the red Omni up, why Apple looks ugly, short-term bear flags all over the place. Flavor of the week is the test of the 200 bar moving average. However, with the short-term bear flags all over the place and Apple looking ugly, I guess we know what's coming our way. We've got the red Omni to add to it, so let's see. Traders, it's early in the week. It's only Sunday night. You've seen the charts. Let's go to work. I'll see you at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do, in my opinion, to keep those emotions at bay is say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Rock and roll live with Oscar.com. I will see you there. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.